What's up, guys? It's Graham here, and we're Okay, in all seriousness, even though Bitcoin was the best performing asset of 2024 and of the last decade, today the tables have completely turned. Bitcoin is quickly falling, down 45% from its all-time high. People are getting their entire accounts liquidated overnight. And even Michael Saylor, who owns 3.4% of all Bitcoin in existence, is now more than $6.5 billion underwater. So now that people are once again mortgaging their homes to buy the dip, I think it's critical that we talk about what's happening, the bull and bear case for today's value, how bad this sell-off could realistically get, why some people believe it could be going down to zero, and when you should actually buy in based on the data. Because here's the reality. This sell-off isn't random. It's not retail panic. It is something much bigger. And once you see it, you'll understand why this next move matters so much more than anything else that's happened before. Although before we start, if you appreciate the last minute breaking news videos like this, it would mean the world to me if you hit the like button or subscribed if you haven't done that already. Yes, it is dumb. Yes, I hate asking for it, but it does help out tremendously. And as a thank you for doing that, here's a picture of a flamingo. So thanks so much, and also big thank you to Incogni for sponsoring this video, but more on that later. All right, so let's not waste any time. Here's the reason we're seeing a Bitcoin sell-off. At this point, we really have 5 catalysts that are responsible for today's price collapse, with the first being 1. Investors are turning risk off. As mundane as it might sound, investors are rotating out of speculative assets and into more safe havens as economic uncertainty is increasing. After all, stocks are trading at relatively high valuations. 3 out of 4 conditions are met for AI to be considered a bubble, and with interest rates expected to remain relatively the same for the next few months, Bitcoin becomes a sell the news event, especially as people take their losses for tax loss harvesting. 2. The US dollar is strengthening. Here's the thing, most people purchase Bitcoin as a hedge against inflation, a weakening dollar, and less purchasing power. But when the dollar starts getting stronger, there's less of a reason to buy Bitcoin, and that leads to a sell-off, especially with 4. ETF sales are amplifying the crash. Just consider this, when you go and buy an ETF, that ETF must go and buy the underlying Bitcoin to hold as a reserve. Now, even though this works in favor of Bitcoin when the price is going up and the ETF is buying everything available, it also works in reverse, where people sell the ETF then has to sell the underlying Bitcoin, causing the price to fall, causing people to sell even more of the ETF, causing the price to fall even further, creating a death spiral. On top of that, 4, there's also no more new good news. For instance, a year ago, there was the promise of a strategic Bitcoin reserve. There was optimism around Bitcoin ETFs. It was assumed that we would just continue printing endless money. Gold had yet to steal the spotlight, and Bitcoin was positioned to be a dominating asset that would eventually increase to $250,000, $500,000, and even $1 million. But now, there's no more good news to look forward to. Most of the highlights have somewhat neutralized. Recent cryptocurrency legislation appears to have stalled, and there's the assumption that if we see another blue wave throughout Congress, they could move to further regulate Bitcoin in a way that suppresses its price, leading to 5th, a loss of conviction. A lot of investors no longer believe that Bitcoin is a hedge against macro or geopolitical risks, for the fact that gold rose 50% in 2025 while Bitcoin fell 7%. Instead, Bitcoin became a leveraged risk asset that was more so associated with speculative stocks. Even Deutsche Bank said that the recent sell-off is more likely about negative retail interest than any one-off event. Or put more simply, people are losing faith that Bitcoin is correlated to anything, causing them to sell off, which causes the price to fall even further, causing people to lose more interest, causing them to sell off. Now, before we talk about whether or not this could soon be a generational buying opportunity that retires your entire bloodline, or the biggest mistake you're ever going to make, we got to talk about Bitcoin risks. To break this down, let's start with one of the most respected investors of all time, Warren Buffett. He's famously said that you can't value Bitcoin because it's not a value-producing asset. If you buy something like Bitcoin or some cryptocurrency, you don't really have anything that's produced anything. You're just hoping the next guy pays more. In essence, this is why he's repeatedly referred to it as a gambling token, to the point where he wouldn't pay $25 for all the Bitcoin in the world. Now, to clarify on this point even further, he explained that assets to have value have to deliver something to somebody, and there's only one currency that's accepted. You can come up with all kinds of things. We could put up Berkshire coins, but in the end, there's no reason in the world why the United States government is going to let Berkshire money replace theirs. Now, even though this seems like a fairly rational explanation on the surface, his late partner Charlie Munger had much more vulgar things to say. Like in the past, he's called Bitcoin rat poison that will go to zero, that it's crazy stupid gambling, anyone who disagrees is an idiot, and compares it to, and I quote, Somebody else is trading turds, and you decide, I can't be left out. But even though some people have been vehemently against it, others have slowly switched their tune. For example, Jamie Dimon of JP Morgan previously said that Bitcoin was worthless and a tool for criminals, although now his firm says that it has better long-term appeal than gold. Or take the billionaire Ray Dalio. He previously called Bitcoin a bubble, but now refers to it as one hell of an invention. Even take Larry Fink from BlackRock. Years ago, he said that Bitcoin was an index of money laundering, but now he admits it's a legitimate financial instrument with potential to outperform the internet. That's why we've recently had several analysts come out with some pretty staggering price predictions over the next few decades. Like Cathie Wood doubled down on her Bitcoin position. Michael Saylor still believes it'll eventually hit $10 million, and Robert Kiyosaki has cash in hand to buy more. However, I'm not gonna lie, this could also be the beginning of a much broader and much worse sell-off that lasts a lot longer than people expect. Like Stifel analysts are expecting it to fall to 38,000. Previous crashes have been as high as 75 to a 90% loss, and there's now the narrative that we'll see $50,000 right around the corner. So in terms of my own plan, what you could do about this and what history suggests is most likely going to happen next. Here's what you came for, because this might wind up saving you a lot of money. Although before we go into that, I just gotta say the biggest risk right now isn't what you invest in, it's... Hold on one sec. Hello? Contact information. It's a spam phone call. All right, real talk, if you're anything like me and you've been getting a ton of spam phone calls, emails, phishing attempts, and texts, here's the truth. While everyone is focused on what's happening in the markets, your personal information is quietly getting sold and reused behind the scenes, which ends up costing you time and money without you even noticing. That's why being diligent is much more than just saving money. It's about protecting what you already have. Thanks to our sponsor, Incogni. For those unaware, Incogni works by reaching out to data brokers on your behalf, requesting that your personal data be removed, and then dealing with any objections that they might have. Then from there, since some data brokers continue collecting your information even after they've removed it, Incogni makes sure your information stays off the market by conducting repeated removal requests. This helps cut down on the number of spam phone calls and emails you get, while simultaneously protecting your privacy. In addition to that, Incogni's Unlimited feature now allows you to submit individual links for removal. Using their customs removal feature, if you Google yourself and you find your information on some shady website, you could literally just copy that link, send it to Incogni, and their team will work to get it taken down for you. Plus, you could submit as many of these links as you want. All you have to do is create an account, grant them the right to work for you, and then sit back while they keep you updated every step of the way. So if you're interested in having your personal data taken down, check out Incogni by going to incogni.com/Graham and make sure to use the code GRAHAM at checkout to get 60% off an annual plan. The link is also down below in the description. On top of that, they're also available risk-free for 30 days, so anyone could try it out, give it a shot, and if you're unhappy, you could get a full refund. Again, there's no reason not to give it a shot. Thank you so much, enjoy, and now let's get back to the video. All right, now in terms of what history says is most likely going to happen next, let's talk about the Bitcoin cycle. To start, it's important to keep in mind that over the last 5 years, despite one of the fastest sell-offs we have ever seen in history, Bitcoin is still up 67%. Since February of 2020, it's up more than 500%. And by all metrics, it is still significantly higher than what most people thought it would be worth 10 years ago. Although with all of that in mind, it is important to remember that Bitcoin is incredibly risky and volatile to the point where seeing almost all of your money wiped out in a few years is not unusual whatsoever. For example, in 2018, it fell 83%. In 2021, it fell 50%. In 2022, it fell 74%. And that is just the tip of the iceberg. In 2011, it fell 99% after the Mt. Gox cryptocurrency exchange was hacked. In August 2012, it fell 56%. In April of 2013, it fell 83%. In March of 2020, it fell 50%. You see where I'm going with this. Through today, it is normal for Bitcoin to rally to unbelievable highs to the point where everyone thinks they have to buy in immediately or they're going to miss out getting rich. Then it sells off 80%, everyone believes this crash is different, people lose a ton of money, and the narrative changes from, I want to get rich, to, well, I learned a lesson and I'm never going to do that again. Of course, it is important for me to mention that just because Bitcoin has recovered in the past and then proceeded to go to all-time highs doesn't mean that will continue in the future. And there is a chance that this time is actually different. But I remember making videos on Bitcoin when it was barely hitting 1,000. I was there when it crashed from a high of 17,000. I made a video when Bitcoin was $3,500 and literally nobody cared. It was one of my least viewed videos, purely because there was no hype around it. I then made videos when Bitcoin was 30,000, 100,000. I remember every single time people said, oh, this time is different, and then something changes and the narrative completely flips. The same could be said about the Bitcoin 4-year cycle. For the last 15 years, Bitcoin has gone through a rather predictable phase where people begin accumulating, the price starts growing, a bubble occurs with parabolic expansion, then the price crashes 80% and we start the process over again. I also find it funny that this person on 4chan seems to have correctly predicted the Bitcoin's all-time high back in 2023. And if this person is still accurate, we'd probably see an all-time low around October of 2026. That's why, in terms of what I think, what's most likely going to happen next, and how you could have the best chance at coming out ahead profitable, here's what you came for. To start, let's just get this out of the way. I'm seeing a lot of posts about Michael Saylor and MicroStrategy being underwater to the point of getting liquidated and collapsing the entire market. So let's just set the record straight. Michael Saylor cannot get liquidated. Look, for those unaware, MicroStrategy currently owns about 3.5% of the entire Bitcoin supply, or around 735,000 Bitcoin. That's a lot. He could theoretically collapse the entire market instantly if he was forced to sell. But that's not how his fund works. It's not like Bitcoin hits 60,000 and he's forced to sell everything to pay back investors. Instead, he operates by issuing what's called convertible debt that really acts more like a long-term loan. In this case, people give Michael Saylor money, he buys Bitcoin with it, and those people could get paid back in a few years in either cash or in MicroStrategy stock if the price is higher. Really, the biggest risk here is that Bitcoin's price stays absurdly low for many years on end. MicroStrategy has to then pay back investors, and they have to dilute current shareholders by issuing way more stock to raise cash to pay back old investors. I suppose in an absolute worst case scenario, he could theoretically sell off some Bitcoin, but that would be the nuclear option, and I just don't see that happening. Second, I also see a lot of concerns about quantum computers rendering Bitcoin worthless. But so far, these quantum computers don't exist. Bitcoin can always be upgraded to become quantum resistant. And even though, yes, it can be a concern for the future if the network doesn't adapt, realistically, it's not something to be concerned about right now. That's why in terms of my own strategy going forward and what I am doing, here are my thoughts. Overall, my philosophy is this. I'm totally fine holding 5 to 10% of my portfolio in a Bitcoin ETF, knowing that I don't need the money, and if the price falls 80%, it's a risk I'm willing to take. Yes, it would suck to see the price fall 80%, but I treat this as I would any other investment. I just dollar cost average on a regular basis. I keep buying if the price goes up. I keep buying if the price goes down. And if it's worth more in the future, great. I've been doing this off and on since 2017, and I'm just not bothered by the price. The way I see it, so far, Bitcoin has not done well when the overall market is falling or against fears of an economic slowdown. So I doubt it's going to serve as a safe haven like gold, but I've also noticed that usually, when everyone has lost hope and everyone thinks this time it's over, historically, it's usually not a bad time to buy. The only investors that I have ever seen consistently make money are those who buy. They're not affected by short-term price, they don't keep their Bitcoin on any exchange, and they just hold through it while regularly taking profits as they need to. I know it sounds boring, but it's true. Those investors are not going all in, they're not gambling, they're not trying to risk money they can't afford to lose, they don't get emotional, they just buy consistently and hold. That's it. That's why I've personally taken the approach of investing a small part of my portfolio in a Bitcoin ETF with the mindset that one day it could either be worth $1 million of Bitcoin or $1. Either way, I'm okay. To me, this is the best of both worlds because I get the upside if it appreciates in price and I limit my downside if everything collapses since I'm not going all in. And also, if I could offer one more piece of observation, it's this. Don't buy the hype and don't sell the fear. Anytime I get that feeling of, ooh, I'm missing out, it's going up higher, it's usually a bad time to buy. Just like when I get the feeling that, oh, maybe I should sell because it's going to keep dropping in price and this is over. Usually, so far that's been a good time to buy. I've also seen every single this time is different argument for the last 10 years. Every time it is different. Every crash is different. No two collapses are the same. They're for entirely unique reasons. But so far, we get through these cycles where there's doom and gloom everywhere, Bitcoin's price does nothing for years after falling 80%, and then out of nowhere, something happens. Obviously, that's not guaranteed, but you don't get rewarded for something without a lot of volatility. The truth is, your chance at making money is directly correlated to the likelihood that you lose money. That's really the trade-off you're making, because it's almost impossible to value Bitcoin. It doesn't produce any cash flow. And it's not promised that the next cycle is going to look anything like the current one. The long-term outcome of this is really going to depend on adoption, regulation, technological relevance, and how it fits into a broader financial system that's still evolving. That's why if somebody chooses to invest, the rational approach is to size it small enough so that any fluctuations don't have any impact on your life. Assume that any drawdowns are going to last a long time and are going to be extremely uncomfortable, and avoid relying on it for things that so far just hasn't proven to be, like a hedge against a recession. Bitcoin could certainly be a growth asset with asymmetric upside, but it's not a shortcut. It's not a replacement for long-term investing, and it's not a requirement to build wealth long-term. That's why I think at the end of the day, discipline matters more than conviction, position size matters more than price targets, and consistency matters more than timing. If that works out, then patience gets rewarded, but if it doesn't, then you've limited the downside. I know that's not exciting, but that's how you stay in the game long enough for your investments to eventually have a chance to pan back out. So with that said, thank you so much for watching. Make sure to hit the like button, subscribe, and don't forget to leave a comment down below because I am at my computer right now responding to as many comments as possible. So if you want to leave a comment, great. Thank you so much, and until next time.